Jonathan, for joining us today. I appreciate it. The Gold Awakening is a podcast I do here out of Windsor, Ontario. We talk about gold, silver, commodities, the overall economic environment, cryptocurrencies. So I've never had anybody on the show yet in the mining industry, so I'm looking forward to talking to you and learning more. So thank you for joining us today. And if you don't mind, if you could just introduce yourself and give us a little bit about your history and what led you to today being the CEO of, what's the name of your Dakota Gold Corp? If you want to just tell us a little more, please.
Sure. So it's a pleasure to be here. Thank you very much for taking the time. And I'm honored to be your first official gold company on your podcast. So Jonathan Awde, President, CEO, and co-founder of Dakota Gold Corp. I've been in the mining industry for almost 20 years. My last company that I was president and CEO of and co-founder was called Gold Standard Ventures, which sold to Orla Mining, which is flirting with a $2 billion company, mid-tier gold producer. And so Gold Standard sold to Orla a couple of years ago. I partnered up with a mining legend, Bob Quartermain, who's in the Mining Hall of Fame, who had started a company called Silver Standard, which went from 2.5 million to 2.5 billion. And then he founded Pretium Resources that was acquired by Newcrest for 3.5 billion. So he's our co-chair. He's our largest shareholder, business partner, mentor, very good friend. And we came across this opportunity in South Dakota during COVID. And the two of us went down and brought some other investors, and we all had to quarantine when we got back during those fun days of COVID. And it was amazing that we had the opportunity to be first mover in this historic gold camp. And not a lot of people know, but the Homestake mine in Leeds, South Dakota is the largest gold mine in the history of the U.S.
Wow.
So 40 million ounces of gold, came out of the ground. And a big mining company called Barrick bought Homestake Mining in 2001. But the mine was already shutting down, and Homestake had other mines in their portfolio. So this sat in their closure group. So we pitched this opportunity to Barrick to buy some of these assets from Barrick out of their closure group. And this would be the third company born out of Barrick's closure group in the last 5 years under the Mark Bristow-led Barrick era. And the other two are Skeena, which is a $1 billion company, and K92, which is a $2 billion company. And we've made 2 discoveries. So we have a completely new discovery on our Maitland project, which is contiguous with the Homestake mine. Same age, same host, same geology. And we're calling it, a new ledge system. So they had 9 ledges. They mined 40 million ounces of gold. This is all on private ground. And we chose to merge the 2 companies. So Bob Quartermain and I had a private company called JR Resources, which had some cash in it, looking for opportunities like this where we felt we could bring in capital, commercial expertise, and really get involved. And we merged with a company called Dakota Territory Resource Corp, which had a small land package in the district, but didn't really have access to capital. And we came in, merged the 2 companies, changed the name to Dakota Gold Corp, and uplisted from the over-the-counter exchange to the NYSE American, New York Stock Exchange. And we've been a public company for a little under 2 years. We've raised about 110 million US. Some of that is publicly, some of that privately. We've got 4 drill rigs active. And I think it's a really interesting time for people who have no exposure to gold to be looking. It's probably the biggest disconnect ever between, relatively strong gold price at 2150, 2160, but a complete lack of interest in the gold equities.
Yeah.
So, sorry?
It's so bizarre. It doesn't make any sense. Gold's at all-time highs, and miners are still way off of their all-time highs.
Well, one of the data points that I look at quite closely are just the inflows and outflows into the GDX and GDXJ, which are 2 of the bigger gold ETFs. And up until last week, you had redemptions, you had outflows. So, which is why there's been selling pressure in a lot of these gold names. And But I think when you look at what the Fed is going to have to do, at some point, the Fed, in my view, in our view, at some point, the Fed's going to have to cut rates.
For sure.
And when that happens, now whether it's in the May, June, or September, or in Q1 of 25, when that happens, historically speaking, the US dollar should come off and the price of gold should be, materially higher than where it is today. I think when you're looking at $2.5 trillion a year in annual deficits, almost $1 trillion to for your military, and $1 trillion to service your debt, $4+ trillion is not sustainable. I don't care how big you are; it's not sustainable.
No.
So, rates we think will normalize, and we think that'll be very bullish for gold. So if gold is starting this next leg up at 2150, I mean, that's fantastic.
So I love guessing the future price of gold and silver and Bitcoin too. It's always fun to pick a number out of a hat. So what do you think? Where do you think gold's heading at the end of? And I know it's not a big deal because we're not short-term investors, right? I mean, yeah. I think that's the important thing. When people get into investments, people want to make a quick buck, but that's not obviously the right way to look at that. You got to hold investments at least 3 to 5 years. So, but just this year, where do you see gold heading? And then maybe give me a 5-year prediction of where do you think the price of gold is heading? Because that's what everybody likes to hear.
Okay. Really want to put me on the spot. So, look, I mean, when gold was sort of in that sort of 1900 to 2000, everyone's like, well, gold's going to break its all time high. That was like a 6% move. So, I mean, who cares, right? You look at, uranium 3 years ago. I mean, some of these uranium companies were trading at literally 1/15 or 1/10 of where they are 3 years later. So uranium's gone from $30 a pound to 107, and it's kind of pulled back to 90. I think with gold could easily be 2,500 to 3,000. And gold represents roughly 1%, maybe a little bit less of global assets. So it's a very small asset class.
That's it. I thought it was larger. Only 1% of total global assets is gold, physical gold.
Yeah. And that's the tail. So that's what's happening right now. You're seeing incredible demand for physical gold, but you're seeing zero interest in gold equities. And you're also seeing this massive shift away from storing gold in the West. And now countries in the East are saying, you know what? You've given us a playbook for what will happen if we don't agree with U.S. foreign policy. So with Russia, Ukraine, so we're going to store our gold domestically. And, but then you're also seeing this de-dollarization where you're seeing a lot of countries that don't want to trade in US dollars. So they're trying to find alternatives, and gold keeps getting brought up. I mean, I don't think gold will be, the brick-based currency, if there is one, will ever be backed by gold, because you look at how long it took to form the euro, and they're all in one continent. And then socially, culturally, and then if you look at the countries that make up BRIC, they have very different views that are often, competing and conflicting. So I think if gold will play some role in that. So I think ultimately, where does gold go? 5,000, 6,000, 7,000. But then again, that not trying to sound arrogant or downplaying what that would mean. You look at a stock like NVIDIA that's gone from $100 to, 900 in less than 2 years. So for gold to double from here over the next 3 to 5 years, I think that's possible. I think the US dollar will be the world's reserve currency for several decades, but I think every year you will see a gradual erosion of maybe 1 or 2% a year, where global trade is starting to shift and get settled in other asset classes, other currencies. But it'll be slow. And I think, but in saying that, the U.S. is the most resilient, most innovative country in the world. We're very happy being on the NYSE American and deepest capital market in the world. But it's a very interesting time. You take out the Magnificent Seven stocks on the NASDAQ. So, and where would the broader markets be? So you're starting to see signs of okay, election year, so there's going to be a lot of gaming with the numbers. And I don't want to talk U.S. politics, but it's getting very topical as to what's happening. It's super interesting. So I think the setup for gold is there, and I think if you're taking that long-term view, as you've suggested, people ask me all the time, how should I get exposure to gold? And I've said, look, if you're going to put $100,000, into gold, do so in quarters or thirds. So
Sure.
Having some physical, do you sharpshoot and buy individual gold companies? Do you buy the ETFs? There's a whole bunch of different ways. And again, your tolerance for risk and your time horizon. And it's not for everyone because there can be volatility. But it's funny because people want to have all this exposure to Bitcoin. Now, I do have exposure to crypto. I mean, it is incredibly volatile. And you're starting to see real free cash flow generation for a lot of the senior producers. So I think it's one of the only industries left in the world where you have this kind of deep value. And I think over time you will see money start to flow to the space. And so that's kind of my kind of macro gold pitch theme.
And I think the big thing that is we haven't really talked about yet is the potential bank failures that are upon us. I mean, regional banks. I mean, that's I don't know if you're aware, but I'm a bullion dealer in Windsor, Ontario as well. And when the banks failed earlier last year, it was taking us a week to get physical silver in our store. After the bank failed, it took us 4 months.
Really?
That's how scarce the physical supply is in the retail markets. So the premium skyrocketed, the price skyrocketed, and it happened really in a really quick period of time.
And that's interesting you say that because, the GLD, which is the gold-backed trading vehicle that trades on the NYSE, you're seeing people wanting to take physical delivery. And normally, some of the big, bullion dealers would pay $50, $100 over a spot for you not to take delivery. So it's really interesting. The physical market, there's a bid there. Central banks, sovereigns, pension funds, again, from west to east, this de-dollarization. So it's very interesting. And I think you're starting to see, because when gold went kind of up $150 or almost $200 in 8 trading days, there was no real, you're seeing cracks in the system. But I think it's the market also kind of front running what the Fed's going to have to do. Right. So really interesting time. But
it's funny too because we feel, I guess, not nervous, but a little uncomfortable saying gold's going to double or triple, right? But the truth is, in the 1970s, it went up 25 times. So for us to just say a double or a triple, I think. To be honest, I think we both think that might be conservative. I think within 10 years, I mean, you could see gold $10,000, $20,000 an ounce. And maybe you're not thinking the same way, but if the dollar goes the way I think it's going to go and they continue to print the way I think they're going to print and they lose control of the banking system, like I think they're going to lose control of the banking system, especially the treasury bonds. I mean, there's just so many things happening. The war could escalate.
Yeah.
I mean, it's limitless. We could talk about how many different things could trigger the price of gold to go higher. And I think they're all going to happen over the next few years. So, I mean, it's hard for people to when I tell them numbers like that, and I used to tell people those numbers on Bitcoin back in the day and they thought I was crazy. And now you're starting to see that happen. And again, I think one of the main reasons the mining companies aren't doing so well is because people rush into assets as the price starts to go up. And all people do is they look at the history of mining companies and they see how poorly they performed and they don't want any part of it. And it's the same with crypto. The last 2 years of the bear market, nobody bought cryptocurrencies. Now that the price is at all-time highs or close to, people are rushing back in. And I think you're going to see the same thing happening with miners. As soon as people start seeing 20, 30, 40, 50% gains in a short period of time, now you're going to gain interest. Then it's going to go up to 100%. Now there's going to be more interest. And I think you're going to see, I think these mining companies could go up. I mean, if gold can go up 2-3 times, threefold, I think the miners can go up tenfold.
Yeah, and that's, you look at the last sort of, great bull market in gold, which was that sort of 2000, 2001 to 2011 when it peaked at 1920. You know, you could have bought Kinross for 70 cents a dollar, went up to 25. Some of these names, I mean, so that's the kind of, but then you're starting this next leg up from something north of 2000. So what you said there about, the value destruction, yeah, I mean, it's a lot of these miners, bought things at the top of the market and a lot of value destruction. And then there was this, we got to pay off our debt. So the balance sheets are actually really good. And, but the challenge in the last, 2, 3, 4 years with COVID has been inflation, supply chain issues, and general margin erosion. Now, there are a few exceptions to that rule where companies have extraordinary, generational assets where your all-in sustaining cash cost is sub $800 an ounce, which is very low. So you're great margins.
That's amazing.
But most companies, now you're seeing that creep up to that $1,300, $1,400, $1,500 an ounce. So still profitable, but not the free cash flow generation that people would expect with gold being at $2,150. So, it's getting harder to find. It takes longer to permit. And depending on what country you're in, investors sometimes don't feel comfortable with what the government's going to do, because some of these countries, you'll have one government for 4 years or 6 years or 2 years, and then it's a figure eight. So you can get business done, you can get permitted, you can build things, but then the governments change and then you don't know where you stand. And investors don't like that discomfort. And you're seeing that in kind of Mexico with are we going to ban all open pit mining? There was what happened with First Quantum in Panama recently, where they pulled the permit. So it impacts a lot of people. What happened in Turkey a few weeks ago with SSR Mining having a leach pad that got wiped into a river. So a lot of companies in Turkey. So it's we were looking for assets and opportunities in Canada, the US, and Australia.
And how does Canada rank, or how does the US rank in terms of a place to mine? I mean, in comparison.
Well, it depends on what state you're in.
Okay.
And it also depends on what kind of land you have. So everything we're doing now, we're on private land. So that's the best from a permitting.
When you say private land, how many different private owners are there? Or is it one?
Yes. So when we started, consolidating and rolling up this district, we went from 5,000 acres of ownership to 50,000 acres. Wow. So we grew the land package 10x. And again, that was one of the interesting opportunities that we saw, was to be first mover in this district, despite its rich history and its, the biggest single gold mine in the history of the U.S. So we have private land. We do have BLM, which is Bureau of Land Management. And then we do have U.S. Forest Service. So from kind of ease to most difficult is private, BLM, U.S. Forest Service from a permitting standpoint, not taking anything away from the geological opportunities that exist on U.S. Forest Service, that exist on BLM or on private. Just saying from an ease of getting business done. So we're trying to do everything we can, as much as we can, on that private ground. So our Maitland project, which is literally contiguous with the Homestake mine, we've made 2 discoveries. We have 4 drill rigs there right now, and it's all on private land. So we've done, I think, 36 individual land deals. And when we started buying the land, we paid as little as $2,000 an acre. And, during COVID, people were looking to buy, fixed assets, real estate. So land values rose to almost $20,000 an acre, and they've kind of settled back with rates rising to, $12,000, $14,000, $10,000 an acre. But again, it depends on what state you can be in. But the state certainly has a reputation for being, from a mineral resources, whether it's oil and gas is a bit different, but base metals and precious metals have a reputation for being, time consuming and quite challenging if you have to deal with the federal government. So my last company, Gold Standard, that was acquired by Orla Mining for $300 million, they're going to be over 5 years to get a permit on BLM ground in the Carlin Trend in Nevada, which is, where Barrick and Newmont have some of the biggest gold mines in the world. And Orla is, best in class, mid-tier gold producer, backed by, Pierre Lassonde. Jason Simpson is a CEO. They built a mine during COVID, on time, under budget. Remarkable. They have lots of cash. They generate lots of free cash flow. But 5 years, it should never take 5 to 6 years to permit something in the U.S. But it does, and that's on BLM, and that's in an established mining jurisdiction. So it's really hard for a smaller company if you are a single asset company, because your investors aren't going to wait for 5 or 6 years, and that's part of the problem in the federal government, because it's almost like you have to go through the permitting 3 different times because these agencies don't communicate and they're like silos. And in certain provinces in Canada, it is getting more difficult. But globally, it's viewed as one of the best places to be operating.
Awesome. So you're currently what's your market cap of your stock right now?
The current market cap is just under 200 million US.
Okay. So that's good value. And as far as production goes, like how much are you guys expected to mine this year as far as gold?
So we're not in production.
Not yet. Okay.
No, we've made these 2 discoveries on our Maitland project, our Richmond Hill project, which is only 1 mile away. Again, past producer. We're coming out with a maiden gold resource. So we're going to announce and publish a gold resource. So it'll say we've got X amount of gold at this grade. And that's on private ground as well. And that's 1 mile to the north of the state's only active gold mine, which is called Wharf. So, we get asked all the time, are you guys going to do this yourself? Are you going to, build it up and then sell it? A lot of juniors fall into that trap of, we're going to make a discovery and put a resource around it and then someone's going to buy us. You have to have that mindset where you're going to build it and do it on your own.
For sure.
And if somebody wants to come in and pay a good price and pay a premium, because we're owners. So management of Dakota Gold owns almost 25% of the company. Nice. So we've got, millions of dollars of our own money into this company. And Bob Quartermain, co-chair, does not draw any salary. So he has full alignment with our shareholders. So
when would you be legally allowed to start mining?
So, we'll come out with our maiden resource in April at Richmond Hill. There's a lot of drill holes that we've drilled that are outside of that resource. And there is a silver component that's outside of the resource. And we found a couple of new higher grade zones that are outside of the resource. So we'd like to incorporate that to another resource, say the end of the year into Q1 of 25, and then go right to economic studies and starting a lot of that baseline work for the permitting. But because this is on a past producing mine site that's got a grandfathered permit that's on private ground, you can actually move things forward with that cadence and that urgency. But you'd still be a couple of years out from those studies. Maybe it's 18 months, but this is something that's bite-sized from a capital perspective. And people say, well, what would that look like? And the mine just to the south of it generated 80 million in free cash flow this past year.
Wow. How big was that?
That does about 90,000 ounces of gold production a year. And it's a great cash cow for Coeur Mining that mines it. It's extremely well run, very efficient. And this Richmond Hill project has, it'll be slightly higher grade. It'll have lower strip. So strip ratio is, how many tons of waste do you have to move to get to a ton of ore? And so the lower the number, the better it is because you're moving less tons of dirt. And so we're really excited about that. And then the reason why we picked up that project called Richmond Hill from Barrick is because there were a bunch of holes that were drilled historically underneath that oxide, underneath that shallow mineralization. So we think there's some kind of a feeder zone underneath that shallow oxide. And so, again, just one of the things that led Bob and I to do this merger was the opportunity to work with Jerry Aberley. So Jerry was the CEO of Dakota Territory Resource Corp. He's now our COO, and he was the last mine manager at Homestake in Leeds, South Dakota. So just that experience, that knowledge, and that passion. And then our Vice President of Exploration, James Berry, also worked underground for Homestake and was a mine geologist for Wharf Resources. And, he made the discovery underground for Homestake on our project. So he's an ore finder. He's as good as it gets. And, we're looking to apply that knowledge to making new discoveries and to really, demonstrating that this is a complex, this is a camp. And the best place to find a gold mine is next to a gold mine. And so these two discoveries at Maitland are right next to the Homestake mine, and then at Richmond Hill coming out with our maiden resource. We also made a rare earth discovery that our shareholders didn't like because they thought it was a distraction or we would be getting, confused. But why we did it was to, could this enhance our project economics? Could this improve permitting timelines? Could this cast a bigger net of investors that will care about Dakota Gold Corp? I think most importantly, in the short term, there are a number of DOD and DOE grants that are available to help develop and foster domestic rare earth resources within, the United States. So we have applied for some of those grants. We'll see what happens there. If we were successful in getting those grants, we would then use that money to move those opportunities along. But they were very high grade, and it's big. We don't know what it means yet because the challenge with rare earths, it's all about processing and metallurgy. So we just need to do more work, and but it's exciting. I mean, this is one of the largest concentrations of gold anywhere on the planet, and coming into this period of time, which we view as exciting. But again, gold is so under-owned. I mean, my kids, they all want crypto. They're like, Dad, no one's gonna, need a gold bar to go buy something. You're a dinosaur. You're a fossil. And that's part of the challenge is the average age of most gold investors is, 65 to 75 or older.
You're right.
They haven't really been through, the younger generation haven't really been through, and they're experiencing for the first time now, inflation, high interest rates.
Right.
When my parents bought their first house, interest rates were 12%, 14%.
Yeah, I think, and there's a very, very good risk of that coming back one day. I mean, if they lose control of the bond market, which I think is I think it's a big possibility.
But Michael, if rates were to go from, say, where they are now, and let's say, 200 beeps, so another 200 basis points, so they went from 5 to say 7.
It's over, yeah. I know.
It's done.
I know.
Really pushing that threshold right now, and I just, when
it's just so basically you're saying they're going to let the dollar die. Essentially, right? Because
I think you have to inflate your way out. I don't know how you can 7%. I think it would kill it.
I know.
You've got 34 trillion in like headline government debt, and that's not including unfunded, all that. And I don't want to sound like a crazy gold bug, but if you look at the financial picture, again, forget gold for a second. Let's just talk about the U.S. debt, interest rates, and the dollar. Forget gold.
Sure.
You've had this, kind of record moves in the stock market led by, fueled by big tech and AI and innovation. And you've had this real estate market that's been stubbornly strong. But if you can't balance your budget with the economy where it is today, if things actually were to go into not a soft landing, into a hard landing, I actually think it'll be a soft landing. I don't think it'll be a hard landing. If things actually got, worse and there was a spike in unemployment, what do the deficits look like then?
I know. Yeah, it's the financial picture of the United States is beyond bleak, and it's. I mean, that's the main reason why you're seeing a lot of these other countries around the world running away from the U.S. dollar, not wanting to use it for trade. Nobody trusts the U.S. or they know their dollar is I'm not going to say useless, but eventually there's no actual substance behind it. I mean, they're not growing like they used to. They're not the strong economy like they used to be. China's growing at a much more rapid pace. The rest of the world is growing at a more rapid pace than the United States. And I don't really see much upside, to be honest with you, going forward. I only think unemployment will get worse. I think real estate market I don't really see much upside there either. And that's why I love gold and silver and crypto so much. I don't really see a lot of upside in other assets such as real estate or bonds or stocks. I mean, you got a 15-year bull market in stocks. The bond market just finished a 40-year bull market. Now they're starting to, eventually they're going to reduce those rates again to try to fuel that back up again. But real estate, I mean, I don't know how many, I know we're not at the highs right now, but again, that's a huge bull market as well. But there's going to be, I don't know how hard this fall is going to be, but it could be really hard. But not even if there wasn't that hard fall, I think just the upside is not there. Yeah. Where gold and silver and cryptocurrencies, the upside there, in my opinion, and commodities in general, I don't want to just single out gold and silver. I mean, I think all commodities will do well in this environment, but I think we're at the beginning of the biggest commodities bull market in history. And I think those are the assets you got to be in, where real estate and stocks and bonds, their best days are behind them. And I think you have to be in commodities right now over this next 10-year period.
Yeah, I mean, I'm also quite bullish and constructive on copper, and copper is sort of a central theme to this, electrification and decarbonization, which you're definitely seeing signs of the big car manufacturers pushing out. Okay, we're going to have 50% EVs by 2030. They're really pushing it out because I think there's been a growing realization that the capital required to get there. I mean, there's no grid to support that in the US. There's no grid to support that. I mean, we have the hydroelectricity in Canada, but just the infrastructure is not there.
And nobody wants it.
So it's funny because, ESG was sort of at its peak a couple of years ago. And we have a lot of investors that will ask them, okay, what are your views on ESG? And a lot of them don't care. And because it's, if that takes away from a better return on investment for them, they're willing to do that at the expense of other things. But it's, so ESG is important for us. We realized and recognized very early on that if we did not have a strong social presence, we would not have a license to operate. And I really have to give credit to our team. So we are looking at a bunch of reforestation, carbon credit opportunities, in lead. But it's still in its very early days for us to get to this decarbonization, electrification, just because of the capital required. And Saudi and the Middle East have said, like, we want to diversify, we want to invest, but it's going to require tens of trillions of dollars in infrastructure. So when Biden talks about $1 trillion infrastructure program, in the States, it's kind of a joke. It's like shooting an elephant with a BB gun. I mean, if cities and rail in the US, aging infrastructure. So again, central to that are metals. And one of the biggest hypocritical topics, well, we want to electrify, we want to decarbonize, but we don't want mining. Well, the only way to get there is through safe and responsible mining. And now I think you're starting to see a gradual change because people don't want inflation. Okay, well, so it's like, well, which one do you want?
Yeah, I don't think we're going to have a choice about not wanting inflation. I think it's coming no matter what.
Yeah.
So, I mean, obviously, like you said, they can't keep raising interest rates. The economy is already slowing globally. So, I mean, I don't know. It's just not. It's not looking good. But in terms of the EVs, I mean, I think there's not even enough silver in the world to supply to even make that a feasible concept of having 50% by 2030. There's not enough silver available. So give me your take on silver. And to me, I'm super bullish on silver. Obviously, I love gold as well. I'm more bullish on silver just because of all the new use cases from the industrial side for silver. The solar panel growth in China and the rest of the world as well is I mean, the demand is just the AI. I can go on and on about all the use cases.
It plays a huge central role to the electrification of the world. Before I talk about silver, and I want to just say something about copper because it's a segue into a bigger point. So the world's largest copper mine is in Chile. It's called Escondida. And it's, I don't know, 5 or 6% of global copper. The world needs a new Escondida every year to meet the demand required to electrify and decarbonize the world.
Wow.
So if to bring a project like that online in production, the average is over 10 years.
That's crazy.
And probably $15 billion of capital required. So it's not necessarily the capital, it's the time. So as we transition into silver and gold, same thing. A lot of these mines in Mexico are older, they're aging, and again, bringing a mine into production, it takes years. And when you have governments that are doing silly and naughty things and want a bigger piece of the pie, and then the social issues, depending on where you are, that's part of why there's going to be this undertone of, in my opinion, our opinion, of metal strength, because there's a shortage of quality assets. There's every year you're seeing countries, governments want a bigger piece of the pie. So it takes longer, it costs more, and they're harder to find. And to me, this is, again, part of this setup in this trade, where if you don't have any exposure to gold and silver, you need to look at getting some exposure. If you don't have any exposure to copper, you need to look at, and again, there's lots of ways to do that. But silver will always have that, what was the ratio? I mean, if gold goes up 100%, silver will go up 300%.
Right.
If the best performing, small cap metals and mining, if gold stocks go up 200%, that best in class silver stock will go up 5 times or 10 times.
Sure.
So I think that with solar and wind and the EVs, silver has a bigger component than gold. Gold's obviously much smaller. Gold's more of a currency than an actual commodity. I mean, yes, it has some industrial use in cell phones and dentistry, but not like silver or copper, where that industrial component, that presence is there. So it's just, they're getting harder to find, harder to permit, and in some locations that are just really logistically challenging, and the time it takes to bring online. So that's where I think, silver, the miners right now in silver aren't making any money. A lot of them, they're kind of trading dollars. I mean, some of the best in, class assets, like Silvercrest has a great project in Mexico. I think their ASIC is like $12 an ounce. So very good margins. But I think if silver goes through $30, it just,
it's game over, right to 60 quick. I know.
Yeah.
It'll be exciting.
So I think it's a really interesting time, and I think some of these silver names have had the crap beaten out of them. I mean, they've just been left for dead. And some of these have like great balance sheets run by real management teams in good jurisdictions. So you're having an opportunity to buy some of these best in class names at generational lows. Again, but if you've got a view that silver is going to be $25 and go to 20 or 15, that's probably not but I don't know that there's a macro or micro argument to support that.
Yeah. Like I was throwing out double or triple for gold, but I mean, silver, I got crazy projection. Like I think silver can get to $1,000 and above. I know that might sound crazy. I don't know if that sounds crazy to you, but I mean, I really do think that's in the realm of possibilities based off the supply demand issues that are, in my opinion, because if the COMEX gets exposed, and again, we haven't really touched on that yet, but obviously there's a lot of manipulation happening there, and that's the main reason why the price of silver is as low as it is, the manipulation of it.
But you're seeing, it's a great point you brought up, and I'm glad you did, because one of the things I wanted to talk about, but you are seeing this convergence of the physical and the paper market colliding. And so for people who don't understand what that means that are listening, so the physical market is very tight, especially for gold. And, you know, COMEX, where silver and gold, the primary contracts trade, metals traders or banks will pay you not to take physical delivery because they're running out. And that's been part of, I mean, the worst kept secret. But you're now, because these, you know, Eastern central banks and sovereign wealth funds and pension funds are taking physical delivery and they're buying physical demand, they have to get it from somewhere. There just isn't enough of it. And you're seeing a lot of these sovereigns and Middle Eastern, Southeast Asian companies or countries buying physical. So the COMEX, I mean, there's probably going to be a run in that time frame that we talked about in the next 3 to 5 years.
Right.
And that, I mean, if that were to happen, I mean, those numbers you talked about, I mean, it gets silly.
Right. And I just don't see how that's not going to happen. I mean, I really don't. I mean, based off of the inventory they have, the demand, the projections that I'm seeing in the silver market specifically, I mean, you're talking about demand of 1.5 billion ounces and they're only supplying 1 billion ounces a year. I mean, where's this extra silver going to come from? That's kind of where, and maybe you can help me answer that question, because I don't really understand how they're going to come up with this silver for the industrial demand. And maybe you don't have those same projections as I do, but that's kind of what I've been hearing is the demand is going to keep growing and the supply is not going up at all. So where is this silver going to come from?
Yeah. So again, I mean, there's just, there are projects in the queue for development, but again, it just takes so much time to get there.
Right.
And you have one new mine coming online and you've got one or two coming off. So I agree with you. I mean, I think I'd be thrilled with $100 silver, because that would be, you know, a 5x return or so from here.
Sure.
But I think if it went to the numbers that you outlined, yeah, there's probably, I mean, the COMEX is probably broken.
Right. For sure. And that's the main reason I have that projection. I don't see a scenario where the COMEX doesn't go down in the next 5 years. I just don't see, unless they just, all these EVs go away completely in the next 12 months and solar goes away. But I just don't think that's going to happen. Yeah.
I mean, you know, solar and wind globally are less than 5%, right? So, and that number is going up. But again, because of this, the challenges that come with electrification and decarbonization, you're seeing, you know, fossil fuels are still going to be here. You know, oil and gas are still going to play a central role. You know, coal is going to play a central role. And, you know, clean, renewable energy, again, for countries that don't have it, just investing that capital for the infrastructure. And that's where you look at what China is doing with wind and solar, but they're also the biggest consumer of coal on the planet. You know, and you're seeing nuclear energy kind of make a comeback, a renaissance with, you know, uranium being, you know, flirting with $90, $100 a pound, and where it was 3 years ago, $30 a pound. So I think you will see those kinds of similar moves. You know, where the sort of the best kind of mid-cap uranium story called NextGen, you know, is up 10x or 9x in 3 years. You know, Cameco, these are generational assets that exist. The gold industry, you will see best in class for the producers, the royalty companies, the mid-tiers, the small cap, and the explorers. You will see the best in class companies have those kinds of moves in a market environment like this, because there's a scarcity factor, there's a shortage of real assets, and there's also, quite frankly, a shortage of teams that actually know what they're doing, that have the ability to make a discovery and take it to production, or have the ability to grow something from 100,000 ounces production a year to 1 million ounces a year. So there aren't that many companies. And that's where when capital does finally start to flow in, you will see these things materially higher. But it's a super interesting time because we're having these discussions. I was at a conference a few weeks ago, and there were just nothing but outflows. It was doom and gloom for gold and silver. I mean,
Really?
No one cared.
Really?
The biggest companies who had, speaking spots, and there was, normally 500 people or 1,000 people in the room, you get a seat anywhere you wanted.
No way.
And that's like, that to me says, okay, we're close to this bottom.
Well, I would say the same because I'm very close to the retail market because we're a bullion dealer here in Windsor, Ontario. We're also an online dealer, and it's not as robust as you would think. It's pretty much. I mean, when silver got to $27 an ounce, it was pretty crazy. I'm not going to lie. It was, but from that point to now, I mean, we're talking about a 70% drop off in terms of volume. Maybe not that high. Okay. Maybe not that high, but I mean, I'm telling you, people don't buy until the prices really start taking off. I mean,
and that FOMO really takes in, and but fear is a more powerful motivator than greed, right? So
100%.
But the greed has not set in yet for the gold space.
Not even close.
So no, I'm very constructive on most commodities. I think that just when you just look at the biggest disconnect that's ever existed between the gold price and gold equities, and again, I have lots of exposure to silver, largely through silver as a byproduct in some of these companies that I own, and then copper. So I think copper's flirting with $4 a pound. But copper is the central theme to the electrification, decarbonization of the world. And, but where I think gold will play more of a role as a currency but to back some of these currencies, gold has to be materially higher than it is today. But I think, again, when you just look at US dollar, inverse relationship with gold, where interest rates will ultimately go. Yeah.
Now, do you see gold backing a currency over the next 5 years, 10 years? And if so, is there a certain area you're thinking? Because you already mentioned you don't think BRICS is going to be that or do you think BRICS will have that as just in the basket of commodities potentially?
I think in the basket, but I just think that because, I mean, the concept of the BRIC, is there, and it's more of, we don't want to trade and settle in U.S. dollars. If we disagree with U.S. foreign policy, we don't want to be penalized. But the time it took, just again, as I said earlier, the time it took to form the euro, and the different views, and there's almost like the haves and have-nots within the eurozone, and I just don't see gold backing the BRIC. But gold is going to play a more of a central role in all major currencies, in my view. But to back gold would have to be $15,000 an ounce in order for it to back it.
Not to mention, I mean, their next plan here is central bank digital currencies, and that has nothing to do with gold. So that needs to come first. And what are your thoughts there? How quickly do you think that's going to be implemented?
Look, I mean, the whole concept of Bitcoin and some of the same reasons why you own Bitcoin are the same reasons why you own gold. You don't trust the government. You don't want to have your money in a bank account, or so that's, from our standpoint, digital currencies, again, they're going to happen. It's a way for the government to monitor everything you do. And a lot of people don't want that.
No.
And again, there are a lot of people who own gold who aren't criminals, who have a strong disbelief in the US dollar or other major currencies. When you look at
the banking system.
Or the banking system, right? Where if you have your money in a bank and there's a run on the bank,
it's game over.
And there is FDIC insurance, but I mean, up to a certain point, right?
And even that I don't buy. I mean, honestly, how is that insurance company going to pay that large bill? It's just not feasible in my opinion.
So there is an element of gold and crypto being an insurance policy, but I mean, I've had friends who've had their wallets, hacked, right? So it's
No doubt.
but then with gold, it becomes okay. Storing it, it costs you to store it and insure it. So there's a cost associated with that. So that there's no perfect exposure. That's why having that diversification is really good. I mean, but I guess I'm kind of a hypocrite because I have a lot of overweight to gold and silver right now.
I'm a hypocrite too.
But no, I think digital currencies are coming for almost everywhere in the world. Every central bank is looking at rolling out one.
Right.
And what does that do to Bitcoin? What does it do to other cryptocurrencies that are out there? I don't think they're going away.
No, I think that's super bullish for cryptos if that were to happen, and super bullish for crypto or gold and silver. I mean, if we ever go cashless, I mean, crypto will be your new cash and gold and silver, right?
It's funny you bring up the cashless. So I was, when I travel, I always like to have a bit of cash, and my family and I went to Europe this past summer, and I went to get out some cash, and I was getting some Swiss francs and some euros. And some pounds, and they were like, "What do you need this cash for?" I'm like, none of your business. Well, we can't give you your money in your bank account until you give us a reason.
Nope.
And I was with one of my kids, and it was kind of getting a little bit uncomfortable because I was like, "Wait, the cash that's been in my account, I need to give you a reason, and it's under the $10,000, because that's apparently money laundering when it's been sitting in my account. That's where it's going."
Yeah. I mean, even us, we're a money service business. We're also a currency exchange, and anything over $3,000, we have to ask the customer through FinTrack regulation, what are you doing with this money? And it's like, it causes so much friction with the customer. And it's like, we have no choice. We have to put something in or we're going to get fined or shut down. And they're like, why do you need to know? And it's like, we're just trying to follow the rules of our government.
Well, yeah, I went to Vegas recently for the Super Bowl, and I got some cash. It's funny you talk about that $3,000 number, and it was over that, and I got asked all these ridiculous questions.
Yeah,
and it's obnoxious.
It is. It's insane, and we hate doing it. It's like
it'd be very different if I came into the bank with a brown paper bag filled with cash.
Course.
Okay, that's a little bit different. But when I sold a stock and it settled, and then it got wired to my bank account from a reputable, like one of the big 5 banks.
Right.
And you can see that where it came from.
Right.
Still asking these ridiculous, obnoxious questions. So it's only going to get more obstructionist and more control, and they don't want to let go of that control. But the system is whether it's broken or it's going to be broken. So it's, again, all coming back to wanting to own physical assets, having exposure to commodities. It's a great diversification tool. Not saying don't have real estate. I mean, I live in one of the most overpriced real estate markets in the world, where in the neighborhood that I live in, you cannot buy a home for under $3 million.
Oh, geez. No, it's just unaffordable. Canada's a disaster. It's just not a place you can afford to own a home for younger kids now. I mean, obviously, if you've been working for 30 years and you bought your house for 10% of its current price, sure. But these new kids today coming into making $60,000 a year trying to buy $1 million home.
I mean, you look at, some of these kids that get a job at an investment bank, and let's say they're in that, 1 or 2% of their grad class, and they make $100,000 a year coming out of college.
Sure.
That should be fantastic.
Should be.
But when the government takes halves, now you got $50,000. Now rent prices are ridiculous. And then what are you left with? How do you actually start building up your capital to invest and buy real estate?
You don't. They're barely paying their bills if they can. And they're going into debt. I mean, our debt's at all-time highs in Canada and the US. And the credit card debt is at all-time highs. And that's why I keep thinking we're near the end of this cycle. And I mean, the good days are behind, in my opinion, as far as, obviously there's still a lot of opportunity to get wealthy through investments, but how many people actually have that extra money to invest, right? I mean, most people are just trying to get by day to day, and it's not looking good. But I'm going to ask you one last question, and it's try to do it in a short period of time. which is going to be really difficult. But as an investor, because I'm interested now in Dakota Gold Corp, give me your little pitch in terms of why you think it would be a great investment today. I know we all know why gold is a great investment. We know why silver is a great investment. What's the great opportunity of I know you've already touched on all of this, but if you can just give a little short rundown as to where you think the greatest opportunities are and why you think we could be at, I don't know where you expect the stock price to go, but just give me your little pitch about why you think it's such a good investment at this point.
Sure. So next month we're coming out with our maiden gold resource at our Richmond Hill project, which we think will be a great platform to move this thing forward. And that's just next month. We've got these 4 drill rigs active on the project, expanding on the 2 discoveries we've made at our Maitland project, again, which is contiguous with this 40 million ounce generational largest gold mine in the history of the U.S. Our geological model is working. So we're having a very high hit rate. This is complex geology, but because of our team who work in the old mine, we're from this part of the world. So again, our hit rate is high, and we're really starting to get a sense of what is the size of the prize. So in one of our last press releases, we talked about our discovery at Maitland in what's called the JB zone in Homestake formation, which was what Homestake was mining for 125 years, is akin to the Western ledge system in the old mine. So that was 6 million ounces of gold at a quarter ounce, so between 8 and 9 grams, high grade. So one of the things we did is we looked at 500 historical drill holes that Homestake drilled, looked at the average thickness, average grade, and what we're finding is, that's there. So we think we're just getting started. It's very rare to be able to get 4 miles of prospective strike contiguous with a 40 million ounce gold deposit. So we're really excited about that. Richmond Hill is low hanging fruit. This is going to be something that's very bite-sized, very manageable, low capital intensity. And again, given that it's very close to surface, high grade, but totally open and on private ground. So I think you've got a team that's had commercial success. Bob Quartermain is a legit mining legend. Steve O'Rourke, our other co-chair, he ran BHP's Global Petroleum, with billions of dollars a year in annual budgets. He lives in Rapid City. He's very active, very involved. And then technically you've got James Berry, who's an ore finder, worked at Homestake underground. And then Jerry Aberley was the last mine manager when the mine shut down. He's our COO. So you've got people with commercial expertise who have made discoveries, who have built mines, and who've also had successful commercial exits, which is really good for shareholders.
Sure.
So I think you have a team that's super aligned with shareholders in a great, well-endowed jurisdiction. And a lot of people don't know that about South Dakota. South Dakota is a beautiful state. Our head office is there. We chose that by design, and we're well-funded. We have the 4 rigs drilling, and you've got an opportunity to have 2 different kinds of mineralization, where we have our 2 discoveries at Maitland in our Unionville discovery and our Homestake formation, which is the traditional host, and then our Richmond Hill project. So you've got 4 or 5 different ways for us to create value. And then you've got this kind of rare earth discovery that's just sitting there.
Yeah.
Internally we really like, but we want to be, extremely focused.
Sure.
And so you've got a bunch of different ways to get paid. And, coming into what we view as potentially the most exciting time to be looking at the gold space.
For sure. Yeah, that's exciting. I really appreciate you joining us, Jonathan. That was very insightful. I didn't know a lot about the mining industry, to be honest with you, other than I do invest in mining companies, but I don't really get into the nitty gritty of it all. So it was really, really interesting talking to you and all the knowledge that you have. So thank you so much. And if people want to look into more of Dakota Gold Corp, how can they find you or learn more?
So again, really appreciate the opportunity and this platform. Let's definitely keep in touch.
Sure.
We've got a great website. It's very resourceful. It's dakotagoldcorp.com. Or, reach out to me directly. I mean, I know that's so.
Sure.
All that information is on the website. I work for the shareholders. So if any shareholder, I don't care if you own 100 shares or 1,000,000 shares, I will talk to you. I will answer all of your questions, because without shareholders, without investors, without that platform, we're nothing.
Sure.
So all of my information, Jonathan Awde, is on the website. So it's jawde@dakotagoldcorp.com is my email address. And my cell phone information is on there as well.
Awesome. Thanks, Jonathan. It was really a pleasure talking to you, and I look forward to speaking with you again.
Thanks very much. Take care. Be well.
Take care.
You.
Take care.